Hello and welcome to another daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, there's been a lot of news in the market at the moment. The tech stocks have come down. We've seen the Nasdaq underperforming, Dow Jones moving around, and Bitcoin declining in value as well. The main thing that we have seen from this front on the Bitcoin side is actually a tweet by Elon Musk on Saturday, which the institutional investors didn't catch wind of until Monday. Now, what has he actually said? He has said that Bitcoin is too highly valued effectively. And at this stage, we saw the price drop a significant amount, and it has continued to do that on the Monday once we've gotten some of those blue chip companies realizing what the changes have actually been. Now, this is actually a repeat of what he did back in May 2020. He said the stock price of Tesla was too high. This was after the split and shares prices were at $140 a piece. Now we're seeing them at $700 a piece. So his effect of trying to push or jawbone his own investment or business down doesn't seem to be holding that much effect. What is obvious though is the effect that Elon Musk has through his Twitter channel and to all of his followers about the prices of asset classes, because they are actually moving things back and forth at quite a volatile rate. Now, I anticipate that the volatility for Bitcoin is likely going to increase. We're already seeing liquidity is less than the S&P 500 and less than what gold has. So at this point in time, small order flows could actually impact the price much more substantially than they have in the past. And we've been dealing with a very volatile asset class in the last few years. So we're probably going to see a little bit more action on the Bitcoin side of things, and hopefully we hear a little bit more from Elon Musk as to what his thoughts on why he thinks it's too highly priced. All he said so far is that he thinks it's moved too high too quickly. But hopefully, with his little short answer that he's had the other day, that's changed his perspective a little bit. Now, moving on from that, we've also got some interesting news to come across when it comes to bond markets. Bonds have been very heavy in the media the last few days, and obviously investors are a little bit concerned about the idea of rising inflation. And so we're already starting to see institutional flows changing their strategies to try and safeguard themselves against the move to inflation. Now, traditionally, when we deal with bonds, we deal with fixed income assets. We have a fixed payout that we know that we're going to get. Very easy to use, something that has been very useful over the last 30 to 40 years when we've had interest rates constantly declining. But for a change of pace, we're now starting to see some of those float bonds that are occurring, i.e. bonds that actually go up in value as the interest rate rises, starting to actually give us a little bit of a changeover. We're seeing more people trying to safeguard some of their trillions of dollars by moving into float bonds instead of the other style of fixed income. So now we're starting to see a little bit of a shift. It's giving a little bit more weight to the idea of the reinflation or inflation trade starting to happen. And naturally, we're seeing commodities actually do quite well. Energy sectors, banking sectors, all starting to pick up in the midst of it as well. And when we think about that, why wouldn't you be confident about where we're going to be moving with inflation? We have even more stimulus on the way. Doesn't necessarily mean that inflation is going to run incredibly hot and we're going to end with hyperinflation, but it does suggest that we're going to start getting into a more inflationary cycle over the coming years. Now, right now, $1.9 trillion has until about the 14th of March to really try and get through. The Democrats are trying to push that as fast as possible to get it in. Now, naturally, it doesn't mean that they have to get all the votes this time because they do own the House and the Senate, but it will be the first test for Democrats and their control of both of those areas. Now, of course, the last piece of this puzzle is a monster-sized piece of stimulus, whilst we've got retreating coronavirus infections and, of course, an increase in the total number of vaccines going out late and an economy that looks like it is starting to actually revive itself, means that with this time round, we might actually see an even greater impact to corporate earnings, corporate stocks, obviously bonds, shares, anything in between that you can even think of is likely going to be going up in value quite hard and fast in the near term, purely because of the huge amount of stimulus that's coming into us, probably an economy that doesn't need quite as big of a package, but nonetheless, we're all going to be grateful for it, particularly on any of our long positions. That's all I have on the news for today's front, but if you have any questions, please feel free to get in contact with me. I'll happily answer any questions that you may have and help you all out as much as I can. Otherwise, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.